Morning everybody, it's Chris here from Stern Education with the 4 Majors Analysis Update for the 5th of September 2011. Hi folks, just be looking at the 4 Majors this morning, starting with the Euro against US dollar on our daily. Let's have a look here. So I've drawn my uptrend. There you have it. Okay, swing high, and a break. Fridays we had a break below. You'll see that the intermediate trend over here, for example, we saw a slight breakout. That consolidation was null and void when it failed to break above a previous support and resistance level here at 14,500. There we go. Noticeable resistance in the past. Failed to materialize from that. CCC was, up until that point, positive because it was forming higher swings. You can see that. Higher swing, failure, breakout. And then it rallied down to the 14,500 mark, as I mentioned in some of my video posts last week, and now it's broken through. Negative figures, stay side, and then there's also talk about a possible lawsuit against the major banks globally. It's very, very interesting that huge lawsuit apparently that's going to be brought forward against 17 banks and over 130 executives for their involvement in the selling of mortgage securities, Fannie Mae and Freddie Mac. So that could be interesting if that pans out, because there's going to be billions lost on that. So there's lots of other stuff that's involved, but that's part of news that's just come out this weekend, part of Friday. But as it stands now, you can see the charts are telling us that we've seen negativity. We had 5 days, a full day last week of consecutive selling, and we've taken back quite a lot of work that we've seen done over the past month or so. So if you look at it on a weekly time frame, there you have it. Last week, huge bearish engulfing at a prior resistance level. Not a good sign. You want to see a bounce. We're looking for a bounce higher. CTC is still extended to the upside for this time frame. And you can see that the institutional moving average, the 200 period moving average, is our next possible target at the 1400. Primarily because we've had a lot of support and resistance in this area before. You can see it through the latter part of October, November last year, through the early parts of 2009, all the way through May, July, August, coming back up to possibly another reattempt either this month or going into October possibly. But this bearish negative candle here, not a very good sign at a prior resistance level. So this is a bearish engulfing at a resistance level. So ideally this week looks like it could be even further bearishness, but we're looking for ultimately the lows here at 1400 as our potential target for the time being. So as it stands now, if we go back to a daily, yeah, it looks like potentially our next possible target will be roughly the 1400 mark. We've just broken through. There is a breach here on the daily, roughly around the 14. What is that? That is the 14170. If we can stay below that, so we'll call that the ceiling level, intraday ceiling level. Okay, that level there at 141740. So if we go to our 4-hour, 14.1, there we go. So that's our ceiling level. As long as price cannot break and close higher than that, then obviously we're going to see further downside movement. You can see here, for example, on the 4-hour, a lot of support. Failed breakout there. Consolidation, and we saw upside, but if it closes and stays below that level there, then ideally we're still looking for bearishness in the market. You can see how steep this fall has been. If I draw my trend line in on a 4-hour time frame, you can see how steep the sell-off is. Swing low, so very steep sell-off. If price can stay below this, consolidate beneath this level here and fail to bounce higher, then obviously we're going to see a consolidation after the sell-off, consolidation to this level here, probably fake out. It'll probably trade slightly through, but if you can see price closing lower going into tomorrow's trading session, then we're going to see just a continuation to the downside for this pair. Hourly charts, you can still see the same thing. Governed here by the 50 period moving average crossover. You can see the CTC is well extended to the downside, and those swing lows as we've seen price falling. So as I mentioned, We want to see price trading on the low end of the wick. So there we go, 16,400. You can see it's pulled back during the Asian market session. It's failed to materialize or continue higher. Just recently we saw another bearish candle, but if you can stay lower than that, then we should be ultimately looking for just a bearish consolidation in the direction of the major trend, and then we should see price pushing forward for lower lows. So as it stands now, look, if it breaks above 1700 mark, then ultimately look for consolidation, bullish consolidation. If not, look for consolidation against the trend, and then a continuation of it when we have a failed break higher. Next up is sterling against US dollar. Here again, like its European counterpart, we've seen literally 4 days of downside trend after a bounce. So midweek, if you look at price action overall, we have seen very negative. If you look at the overall trend, we can see the price has been trading on the other side of the upside trend. However, failed to consolidate. We saw 16,400 recently being tested, failed to materialize as I mentioned. We saw a reattempt and a break higher. That failed to trade any higher. We saw prior resistance here at 1655 being breached. We saw a potential target of 16,700 as the potential target overall. That failed. CTC was still strong though. We saw a potential pullback. We were hoping to see support. We did think we saw support for that particular date there on the 23rd. However, price action at the low end of the wick didn't bode well, and we wanted to see price at least closing above 16,400 to give us an idea that we're going to see a higher swing, because we had a low on here, and that was depicting the upside. So if we wanted to see a bounce at this level here, oops, if I can just get this right, it would be fantastic. There we go. So ultimately that was going to be our bounce, and that's failed. And we can see what's happened now is we've seen a rally here, consolidation at the level here, a bounce higher, a failed attempt again at 16,400. So, and then a bearish engulfing, and then we saw going into Friday negativity, strong selling into the day, and ultimately what's happened is we've seen price failing at another support and resistance level, roughly around the 1610 mark. So where to for this price wise, you can see now CTC is in our favor on a daily. Ultimately we're looking at the institutional moving average as a potential target. Ultimately long term though, we're looking at 1600 as a potential target. Why? Because that has been a very strong support level psychologically over the last year or so. You can see here noticeable resistance and support along this level here if you look at a weekly chart, for example. So there's definitely been consolidation at this area. If you look at last week's bearish engulfing, you can see we had an all-time high here back at 1670 going into May or April of this year, and then we've had the institution moving above us as a resistance level, failing to allow price to move higher, and we've had this bearish candle set up on the weekly here, pushing it down. CTC on the weekly is still looking positive, but on a daily is looking really negative, and at the moment now ideally our next target is going to be the institutional moving average, because we've had price support and resistance at this particular level in the past. So that's going to be psychologically our next potential target. So if we look at it, you can see a fast support, resistance, further resistance, and then support, and then another bounce here end of Thursday of last week. So slight consolidation, price action, but as we speak, the pair has opened up very indecisive this morning on the Asian market session going into European session. We want to see a continuation lower. That's the trend direction as it stands now. You can see lower swings depicting a downtrend, bit of consolidation, failed to materialize on the upside, the resistance level here at 1625. So it should, ideally we should be looking for further downside movement to at least this level here at 1300. So intraday, let's have a look at the 4 hour. 1300 is a potential support and resistance level. There we go. You can put it on your 4 hour time frame, so you know psychologically that's potentially where the next likelihood of a price might be reverting to. You can see the lowest swings here depicting downside movement. We have a slight consolidation range. A break below 1613 or 161300 would definitely confirm that we're still very much in a negative downtrend. We should be looking for further down moves. So consolidation as it happens now going into this morning's session. The US markets, Canadian market is closed. However, I think we're going to see some further movement today, primarily on the shocking figures we saw, the employment figures that came out of States on Friday. But also, there's a lot of news circulating that there's potential lawsuits for 17 of the largest banks regarding to Fannie Mae and Freddie Mac's lending issues. So that could all be factored in. But as it stands now, we're seeing consolidation. And ultimately what we want to do is either see a bounce and break higher than 16,500 intraday to give us any potential upside movement trading to at least, in this case, back to the institution moving average roughly around the 16,300 mark. If not, then we should see a price reattempting the 16,1300 mark, and a break below that would definitely confirm long term that we should be looking for further bearishness on this pair. Next up is US dollar against Swiss franc. What we see in this pair here is a rally recently. This is after the Swiss government put in place measures to try and stem the downside negativity seen on the US dollar recently. That helped quite a hell of a lot. We saw 80 being a very strong support and resistance level sometime before that news, or before those measures were implemented. We saw a lot of head bagging, and then we saw a breakout to the upside, and then price rallied ever so slightly to the 80, just below the 8,300 mark, which happened to be a price support and resistance level in the past. We did mention that we wanted to see a break higher than that because this was a consolidation band. Breaking higher than that would obviously be taking it well above all the moving averages. And going into that, the CTC was looking very, very positive. And then towards the end of last week, Wednesday, Thursday, and Friday, we saw some real negativity hit home as the US dollar lost a lot of ground, primarily because of the overall the unemployment figures stateside not showing any growth whatsoever. There was no new jobs available end of last week, which doesn't bode well for any sort of any positive in the economy at all. That's saying that it's just looking really not rosy at all for this pair, and we saw, regardless of what's happening in the Swiss franc to try and alleviate this downside, that we're still seeing a lot of selling, US dollar selling and against the Swiss franc. So back down, we've had this hammer-like looking pattern here at a price support and resistance, a consolidation area. Ideally want to see a break below the consolidation area to look for any potential downside movement or continuation to the downside. You'll notice that price is still looking negative, even though we had two of the four requirements for the CTC strategy. This long wick here could possibly affect a lot of people into the trade here. We would ideally like to see a close and trading lower than the 78.50 to give us an idea that we're going to see further downside movement. If we do get that, then there's only one small slight consolidation area, that's at 76, before we see a lot of air between 76 and 72. So break below the 78.50 would see target 1 to 76, target 2 would be 72 long term for this pair. So as it stands now, let me look at it on a weekly chart. Let's see if it takes it up. There we go. You can see a hammer, a bullish hammer on a downside. We saw a breakout hesitation. We've seen that consolidation at the underside of 83, which hadn't punched through because that was the last major consolidation area on this pair. You can see over here, for example, there has been consolidation just over here. So there's a breakout, pullback, continuation. That was after a strong resistance level had been posted. Here again, we've seen the same thing. So we've had breakout, we had a consolidation. That consolidation has been null and void because it failed to break higher than that prior consolidation here, and we've seen resistance, and now we're going to see possibly further continuation to the downside because it's failed at that level again on the weekly. CTC is still extended red, so we should still be looking for ideally further downside movement. But on a daily, we want to see that 76.50 being breached first before we get any idea. You can see the candle at the moment now is gone red, but we don't have the red arrow. You like to see a red arrow first, then red candle, then the CTC on either side. If that gets it, then going into this week, then we're going to see a continuation to the downside for this pair. Look at intraday. You can see that consolidation. In that consolidation range again. As I mentioned, 76. We'd like to see a break and close below 76.50. That would definitely bode well, because then we're trading below this institutional, trading well below the institutional moving average, as well as all the moving averages in particular. Lower swings depicting downside movement on this pair from the high, consolidation high at 8200 here, fell to materialize going into that, and we saw low highs being picked. You can see over here, for example, it's now in this area here. If I can just mark it out really clearly. There you go. There's a consolidation band there, for example. It needs to be trading either side of that, and we'll see further momentum. We don't want to be caught in any sideways motion, so ideally break and close low would definitely look for potential bearishness to the downside. Then if it break and close higher than 800, as I mentioned, which happened to be a very strong support and resistance level in the past, if it breaks above 800, then there's a definite opportunity for 8200 to be re-attempted quite soon. But you can see now in this consolidation range, want to see trading lower than this level here to give us an idea that we should be looking for further downside movement. Breaking higher than the box would definitely signal that we should be looking for further upside movement. Last pair of the day is US dollar Japanese yen, back in its consolidation range. Look at the weekly setup. Let's see if we can get a weekly chart really quickly on here. Could take a bit of time. There we go. So you can see the weekly charts for a number of weeks just potting along, not really doing much. The consolidation band here, that support level roughly around the 76.50 mark, failing to break lower than that. We've seen a couple of weeks, we've seen intervention or the Japanese market trying to stem this downside movement. You'll notice for a number of months, price actually sat along at the 80 mark for a very long time. A lot of support found around the 80 mark on a weekly chart. Then we had a breach of it. We saw some selling, and then we saw a pullback, intervention pullback, fell to stem that negativity in the US dollar against the yen, and we saw it trading back in its consolidation range. And now for the last number of weeks, almost a full month or so, it's just been trading along this 76.50, this support area that you can see here at the bottom. So it's consolidating. CTC is still negative, still trading below all the moving averages. So overall, long term, it's still looking very, very bearish. However, we find a very strong support area. As the same with here at the 80 mark, we could be doing this for several months. We could just be bouncing up and down or consolidating along this trend, and that's what we've seen recently. We've seen price consolidating at this band and then trading in this consolidation range. So if I just draw the box here, you can see a lot of wicks, support and resistance here, roughly on the 77 and 76.50. So there's this 50 pip bandwidth that's just been consolidating. We've seen a fake out and a breakout, but that's failed to materialize, and we've seen price reversing to the lower side again. So ideally, we want to see either a bearish engulfing breakout of 76.50 or a bullish breakout above 77. That's it. Failure to see either of that, we're just going to be trading in this consolidation range, and it's entirely up to you as an individual if you would like to trade in this range. You can see very messy between those 2 points. Is it worth it? In my eyes, not really. More heartburn than anything else, and there's a lot of chance of being faked into trades only for it to go against you. And when you're seeing a very volatile market, especially on the US side, and the yen and the Swiss franc in particular, very closely tied to the US dollar, any slight hesitation or any indication of potential upset has seen price really rally and fake out. You can see a lot of wicks here. This is on hourly chart, guys, so you got to have very strong, very tight, or not tight, very big stops in order not to be triggered or faked into trades, put it that way, only for price to really go against you again. So not really worth it. I want to see a definite bullish breakout of 77 or a very definite bearish breakout to the bottom side of 76.50 to confirm price direction. Otherwise, I'm not going to be trading it. So that's it for today's session. I'm not going to be talking anymore about Japanese yen until I'm trading on the other side of that. So yeah, hope you have a fantastic trading day today. Be aware that the US market and the Canadian market are closed today. Bank holidays both on the other side of the Atlantic. I still think we might possibly see some further movement today on those negative figures we've seen stateside. I think as the European session wakes up and figures that there's been no growth US side, then we're going to see a ripple effect. Other than that, have a fantastic open week and trade serenely.